So you wrote the book, not quite literally, you wrote the article on 1 minute and 5 minute scalping. What do you think are some of the most important differences between the two approaches?
So 1 minute scalping is more about the flow, and 5 minute scalping is more about understanding the microstructure.
And what do you think is the scalper's exposure vulnerability to costs compared to other strategies?
Scalpers are most vulnerable to costs than any other trading style. You need fairly well execution, small slippages, lower spreads, and things like that. So it's absolutely essential for scalper.
Hello and welcome to this week's episode of Exness Trading Talks. Last week we talked about the power of liquidity in market sentiment. So if you missed that video, you can click the button here and you can go back to watch it immediately. This week we're going to be talking about the strategy for 1 minute scalping. I'm Michael Stark, Financial Content Leader, and joining me to discuss the strategy is Stanislav Bernukhov, Senior Trading Content Specialist. Welcome, Stan.
Yeah, hello Michael, thank you for having me today.
So broadly, how would you categorize or how would you define scalping? What do you think are some of the key factors to be aware of if you want to be a scalper?
Well, scalping is probably the short-term strategy, the most short-term strategy that you can ever implement in the markets. So the shorter is high-frequency trading, which is not done by the retail trader. So, and it involves a lot of observation, a lot of watching the price action, things like that. So, and usually it involves taking small profits, and it should have pretty high hit rate in comparison to position trading, for example, or swing trading, when you can afford 80% of stop losses and then you gain it all on 20% of your trades. In scalping, that's different. So you need to be right many times and capitalize on small gains, relatively small gains, letting your equity curve moving smoothly. So that's what scalping is about.
And I want to talk briefly about two articles which you wrote for Exness Insights. Excellent articles, by the way, which you can find linked in the description just below here if you want to know more details, which is 1 minute scalping and 5 minute scalping. So how would you say, in summary, the approach is different between 1 minute scalping and 5 minute scalping?
1 minute scalping is a little bit more detailed, so it more focuses on the flow itself, while 5 minute scalping is more related to the structure, understanding of the market structure, microstructure of the intraday price action. So, in other words, 5 minute scalpers should have better recognition of patterns, chart patterns, if you will. 1 minute scalpers should be better flow readers. We can say that.
Yeah, makes sense, because on 1 minute chart, you're not necessarily going to really get patterns in the traditional sense.
There are a lot of noise on the 1 minute time frame, so it's more about the flow. 5 minute scalping is also about the flow. It's much about the flow, but visual recognition and structural analysis might be a little bit more in focus for 5 minute scalping.
So I want to pick up a little bit on what you said before about the hit rates. It's important for a scalper to have a high hit rate, right, compared to a swing trader. But we would, or usually anyway, you would expect a swing trader would say it's critical to have a good ratio of risk to reward. Is there an equivalent of that for scalper? Is there equivalent, like, key thing to do to decrease risk?
It would be good to have the good ratio, but in many cases, scalper just needs to operate with what market gives to him or to her. So mostly it's just short-term moves, and compared with your stop loss, which you set in the market, it might be either, 1 to 1, 2 to 1. So if you capture a really good move, so you can capture 5 to 1, 7 to 1, but it's relatively rare and it requires some skills. And that is mostly, I would say, a day trading rather than scalping. Scalpers mostly take the quick shots many times. If you take 2 to 1, so that's already good. If you take 5 to 1, so you can call yourself a day trader, but it might be also the representation of a scalping.
Yeah. And I mean, it's possible certainly to combine them. I mean, does somebody consider themselves a 1 minute scalper and a position is going really well, they see no reason to close it? Well, why not let it run,
Yeah. So if you read the flow and you see suddenly volumes coming in out of nowhere, so you don't even need to read the news to see what has happened, but you see, for example, market starts moving more aggressively with a greater pressure, so you might decide, okay, so wait a minute, what if I hold it for a while, a little bit longer? And sometimes you can see that, for example, price drops, you have a short position, and price immediately drops much more aggressively than you expected. So that's when scalper closes a really good day.
Yeah. Oh, yeah, it's a great moment when that does happen.
Yes.
Just also need
Feels
to be
great.
prepared psychologically for the opposite thing of happening. It moves more than expected the other direction. Yeah. So can you share a little bit about your personal experience, Dan, of 1 minute scalping? Like what are, some of the things that you've learned? What are some of the particular instruments you like to trade?
Yeah, I do scalps from time to time, especially when markets are closed, when there are holidays. And for example, in October, there was government shutdown.
Yes.
I used to do a certain number of scalping trades. And so it was like, 13 winning days out of 15, the total number. And it's like making some consuming work. Sometimes people feel at the end of the week that they were doing some physical work. So it feels like that. But speaking of emotions, like some people feel when they lose the profit, they had a paper profit and they lost it, or they get a stop loss, scalpers might not necessarily feel that because they book a profit, they move to the next one, they book a profit, move to the next one. So it's more like a concentration rather than just frustration. But when you don't read the flow, when you fall away from the process, when the flow is not readable, so that's when frustration kicks in, and you need to manage that. You need to pull yourself out of the screen.
Yeah, and I think a particular highlight also for me personally there is scalpers need to be a lot more reliant on the broker to execute the trade correctly compared to a swing trader, other things being equal.
Exactly. Execution is a king for a scalper, because for swing traders, you might afford, wide spreads, for example, of position traders. They don't care about the spreads actually, and swaps and anything like that. Because whenever you catch the big wave, it excuses everything, it covers everything. For scalpers, so economics of the business, let's say, it's very, very sensitive to your costs, to your spreads, commissions, slippages, and all that stuff. So because if you do a lot of trades within a day, combine it into the series, and you may be surprised how much money do you give away for costs.
Yeah, exactly. That's quite true. Yeah, if we do that calculation. Okay, so thanks very much, Stan, for being with us, for giving your insights on this topic. And thank you also to our viewers. And please make sure to join us again next time when we'll be talking about currency trading strategies in general with Andreas. Make sure that you subscribe, have notifications turned on so you don't miss that podcast next week. Hopefully we'll see you there.